Good morning, Paul Georgie from Allendale. It's January 18th, Friday morning. Grain markets have rebounded, giving and taking back all of the losses that we seen yesterday in the futures market. Not a lot of new news to talk about, however, but kind of regurgitating some of the old news and reworking some of that to be positive. In China, we've seen the price of soybeans there end the week higher, up about 18 cents, comparing that to a 57-cent rally here in the U.S. The meal market there jumped sharply, though, up about twice as much as we have been here in the U.S. this last week. And I think that's part of the reason why we're seeing talk and hearing talk about the crush margins improving in China. And certainly a reason why they've been more aggressive about buying soybeans and fill-in buying. A lot of this bean imports have been beans coming out of the Pacific Northwest, which is the only reason there is they want them immediately because there's reason to have those beans because of the better crush margins. South American weather is a yo-yo, I guess. You get a negative or a hotter forecast from one service and a wetter forecast from another. In general, the people that we talk to look for some rains in Argentina next week, covering 50-60% of the area, and temperatures will get warmer next week, but only stay around for a day or two, so not really a ridge building situation down there. It looks like most of the crops are in pretty good condition. Brazil, we've got consultants down in Brazil that continue to raise the Brazilian bean crop. The latest one was raising it to 84 million metric tons. It seems there to be a race of who's got the highest believable number at this point in time, and even though weather and everything is excellent, we've also got other news out of Brazil that is supporting soybeans. Is that there's been talk that Brazil might have stated or oversold their export capacity as their ports are still filled with corn in order to get the corn out of the way and get the beans moved in. Logistically, it might be improbable for that to happen in early February as expected. Some negative news here in the U.S. is that ethanol plants are closing. There was an announcement yesterday that 2 ethanol plants in Nebraska will be shutting down until the situation arises that they can be profitable. We're also hearing from other plants and customers of ours that their losses have been sizable this year, and they're considering the same thing, either closing down or slowing their production down to a level that they can reduce some of this bloodletting as far as the margins go. So that certainly doesn't look well for the corn price at this level. We've got in Pharma out at 10:30 this morning. They'll be giving us some their new estimates on planting of corn, soybeans here for 2013. In the livestock trade, Cargill announced yesterday that they will be idling their beef processing plant in Plainview, Texas, until supplies of cattle change. The drought and feeding margins and number of cattle on feed have certainly tightened their cattle supply, and they've decided to idle this plant starting February 1st. That news hit the cattle market hard yesterday. We see continued pressure in the nearby February contractor this morning. The cattle market itself is extremely oversold and certainly is due for some kind of a recovery bounce. But with the pressure that we're seeing here in the cash market and the inability of the product to strengthen I don't think we can get too excited about the first bounce that we might see in this cattle trade. Cutout values yesterday, choice down 163, select down 184. Pork cutout values were down only 37 cents. We've seen the pork futures show some strength in here as cash markets are basically steady. I think the futures market in hogs are looking at the cold weather that we've got forecast for the Midwest here next week. It could slow down the movement of hogs and could support prices here for a little bit. So the trade's looking at that as supportive. I think there's also some spreading going on between the cattle and pork complex that is driving some of the futures moves here in the last 24 hours or so. So stay in touch with Allendale's research. We'll keep you informed there. You can reach us at 800-262-7538. We're only a week away from the Allendale conference, and I want to remind everybody, if anybody has not called in and got their rooms reserved yet at the Holiday Inn here in Crystal Lake, do so. They still are taking reservations on the Allendale block, so make sure you get the discounted price. If you got any questions there as well, just give us a call and we'll help you work through it. We look forward to seeing everybody next week. We wish everybody a very successful trading day, and I will talk to you tomorrow morning. Thank you.